Good morning, traders. It is Wednesday, the 18th of November, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not indicative of future results. The news overnight was not all that thick, but some important releases there. API petroleum inventories came out after the close yesterday. Crude came in at negative 0.48 million versus plus 6.3 million prior. This is the first draw in 6 weeks. China's October home prices month on month fall in 33 out of 70 cities versus 21 prior. So the dragon is puffing smoke. It's just a huge. I think China is still the thing to watch, the economy to watch here for major signs of trouble. A lot of mismanagement there, in my opinion. Target Stores reports 86 cents in line, 17.6 billion in line. Their stock is up about 0.75%. U.S. October housing starts came out about a half hour ago. Came in at 1.06 million, a little lighter than the 1.16 million estimated. Building permits 1.15 million in line. Fed's Lockhart also came out and stated that the criteria for rate liftoff regarding employment has been met, was prepared to support liftoff in September. I believe he's still currently speaking. Other than that, looking at today's calendar of events, we have 9:30 crude oil inventories, 10:30 Eastern, expecting negative 1.65 million on gasoline. Crude oil looking for positive 1.75 million, and distillates looking for negative 750,000. We are clear once crude comes out. We are clear up to 11 o'clock, 12 Eastern for Fed's Kaplan on economic conditions and policy. At 12:30, 1:30 Eastern, ECB's Lautenschläge. And then, of course, at 1 o'clock Central, 2 Eastern, we have the FOMC minutes from the 27th and 28th. Last time we got those minutes, it was the market did experience a lot of volatility. So let's switch gears and look at the overall picture. This chart looks messy. Contains a lot of information, but let's look at yesterday's auction. So yesterday's auction worked out just as expected. I did post an image yesterday of what was expected versus what actually happened, and it was basically completely in line. We expected responsive selling into the on the open, and we were looking for, hang on one second, we're looking for a test lower, chop, and then for the market to base and rally, and that's exactly what it did. So here's the image right here. Let me grab this. This is the image of it that I posted that was off of the TraderByte. The white lines were drawn during the TraderByte. You can see here expected some responsive selling into the prior day's range, chop, 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 and then a push up and through. And that's basically what we got. We pushed into this 5650 VPOC and into the 61 target above, 61 being the area of a composite LVN plus the Fed low. So let's zoom into that a little bit. I know this chart looks messy, but as areas trade a lot, they start to, there's more and more confluence in those areas. So here we are. The 6150 was the Fed low, and that was our key target for today. It pushed to 6350. The 50% pullback of the entire sell-off is at 6250. Remember, I use RTH. I use the pit session only for my analysis. I do look at the Globex session as part of my context read, but my studies and everything else is done on the ES when the underlying products are trading. So here we pulled back to 50% of this move down so far, and that 50% at 62.50 will push to 63.50. We found sellers. If we look at the profile yesterday, it shows a pretty decent taper on the high, and a really good taper on the low, and the market finished in the middle. The market broke the IB high right here, the IB high being this yellow line, IB low being this yellow line. IB represents the first hour of trading's high and low. The basis that the IB is built on is that generally OTF operates and gets done with a major part of their business in the first hour, and we identify how far the market got pushed one way or the other. OTF is what's called the other time frame, or the higher time frame participants, the energy that generally dominates the market movement. We broke the IB low later in the session for neutral, and then we ended up closing in the middle. This is a normal neutral day. The auction is complete below, the auction is complete above, and that same logic carried into the overnight session. So my expectation coming into the overnight session was for completely sideways, nothing to do, and that's exactly what we got. The market drifted lower at first, and then we broke higher on once the European market opened. We started to drift higher. We're pushing highs. We've got a weak high on the overnight session. The market wants to resume its trend up. Now remember, a couple things to note here. Let's reduce some of this noise. So we know where the fib is. We don't need that. Let's extend this out. And let's clean up the chart momentarily here. So now we're just looking at the profiles and the price action on a 60-minute chart. And what we have is a market that has dropped from 2110, had a pullback, and then it had a continuation move which involved a gap and then another gap. And then we finally based and turned around on Friday and Monday. And what we have here is an impulsive move up. And the expectation from here, given the action that we have, the most recent action, and the legs we're looking to trade in our time frame, the expectation here is that the market's likely to seek to auction through some of this impulsive move up that we had on Monday, and then make a higher high. And the target for that is that 69 quarter area, and a high volume area that's right there. So once we pull in this profile, we can see that our targets are likely to be 69 quarter, 74 quarter. The key target above is this 2080.50. 2080.50 is the most traded price in this region. And essentially we tested this low volume node. We tested this low volume node here yesterday. Man, I cannot draw a line. So that low volume node is at 63.50, which is right there on the dot. And we've started to move into the 63 quarter to 68 is the gap zone that was left behind here. So what the market has done is it has pushed back into the gap. We have what looks like an inverted head and shoulder forming, V-bottom type of configuration, and the market is likely to push through this LVN and then start to work itself back into the high volume nodes. That's the expectation over the next few days. With the overnight session pushing near highs, it's not surprising. However, on the open today, the expectation is that it would likely respond, since it's opening in value in range. It's likely to respond down into the 49 quarter area. Remember the 45.50 area, this naked point of control from earlier. If you draw a line across the 45.50 and look at the hourly chart, you'll see a lot of bounces in that area. Going way back. It's a price that has been tested and retested. So that would be the extended test area down, but I'm looking for it to respond to 49 and a quarter. So initially, probably we'll take the overnight high, respond back, chop, and then we're looking for a continuation move through the gap zone left behind last Thursday and push to 69 quarter and 74 quarter. From 54.50 today. That's 20 points. It's about as much of the range as we're likely to get here, unless we get another impulsive move. But that's how things are shaping up as a primary hypothesis. Responsive, test the prior most accepted price area, base, and then start to push up again. That's what I'll be looking for today. I don't have much more here to say other than the fact that the move up, wow, let's clean this up again. The move up here is still showing a lot of strength. There has not been a significant retracement. If we draw a retracement on this, the 50% fib, I already have it on here, is at 1986.50. I look at the 50% or mid of sessions all the time, because once the market passes the mid, the probability of taking out the high that created that mid fall off dramatically, based on a study I did probably 7 years ago. But it's fairly consistent. So to me, the mid is a key area, and that's why when I draw a fib on here, it automatically shows me the mid in a thick value, rather than show me the 38 and the 60 whatever, 68.2 and things like that. I'm not paying too much attention to those levels. I'm really interested in the mid. It doesn't. I know Elliott waivers will disagree with this, but it's not so important to me that there's a 38 fib and it's holding. I'm looking more at the auction itself, but measuring the midpoint of a day or midpoint of a move does give me a lot of confidence in the trades that I seek to hold. Anyway, you got the primary hypothesis. I'm pretty much out of time. Not much more to offer you. Just the same routine. Just be patient. Leave some bullets for the FOMC minutes later. I expect some volatility later. I expect the market to react one way or another once they see the minutes. So don't take too much risk early on, and take yourself out of the game before we see what the Fed has in store for us. Good luck today, and I'll catch you tomorrow. Take care.